Hello, this is Ernest Burley Jr., your certified financial planner professional, your investment advisor representative. I hold the Series 663 and Series 7 that allow me to offer securities products for clients across the country. I'm your chartered financial consultant. I'm your NFLPA registered player financial advisor. I'm also your author of 2 books on money management. Get those. That's Money Management, Easy as 1, 2, 3, and Money Management from Grade School to Grad School. Those books are being used across the country in different states, different organizations to teach financial planning principles, money management principles, and also insurance concepts to individuals. So please go to Amazon, buy them by the box load, so you can teach principles from those books to help your congregation, help your family, help your coworkers, help your friends, etc. I really appreciate those who are doing it right now, and thank you in advance for those who are going to do it. I'm also a licensed insurance agent with over 30 years experience in the industry, and I've been in business for over 25 years, helping people from all across the country, from the north to the south, from the east to the west. I have clients all over the country, helping them out in the areas of financial services and insurance, and I really love doing that. All right, so here we go. The specialties that my firm has, or that I have, include things like wealth management, so investing, 401k plans, brokerage accounts, things of that nature, IRAs, all that kind of stuff for investing for the future, and also asset protection, so protecting what you've accumulated, and asset growth, so trying to grow what you've accumulated and grow it in a strategic fashion. Financial planning, whether it be basic financial planning or comprehensive financial planning. Also, all different types of insurance, whether it be long-term care insurance, life insurance, disability, auto, home, business, church, professional liability, contractors, boats, rental properties, jewelry, just the whole 9 yards. We take care of all different types of insurance exposures for clients. So the purpose, and also athlete management. I don't want to forget athlete management, because on the NFL side, like I said before, I'm an NFLPA registered player financial advisor. And on the NBA side, I'm an NBPA certified player agent. So I can get guys opportunities to get seen by someone in the NBA to see if you got that to get over the edge and get an opportunity to play out your dream in the National Basketball Association. I'm also FIBA licensed, which is overseas, so we can get you some opportunities overseas too, if that maybe fits your skill set better. Okay, so the purpose of this podcast is to enlighten, to educate, and to empower you with unbiased, objective, clear, concise information, so you can make some great decisions for yourself and for your family, for your church, for your business, for whoever you're connected to. Okay, now today's podcast is going to be pretty to the point. It is titled Investing in Mutual Funds versus Stocks. Pretty simple title, right? I've gotten a few questions on that before, so I'm going to kind of attack that right now today. All right, so like investing, here we go. Investing is a very foreign world, a foreign creature to so many people. I would venture to say probably most people. Investing is like a foreign thing to most people. Some people have never invested their money. I've actually run across people who have never invested. They never put their money in the stock market and done anything like that. And I'm like, wow, it's just, that's water under the bridge. But it probably would have been a much better situation had they done that over like 30, 40, 50 years, because I'm talking seniors who have told me that before. So some people have never done it. Now, others realize they need to invest, or they should invest, but they're like really uncomfortable doing it. While many people are actually investing, they may not consciously think about it, but they're actually investing in their 401k plans, or 403b plans, their TSPs, their retirement plans at work, things of that nature, but they have no clue of what's happening with their accounts. They just know, hey, I'm putting money into my retirement account, and that is a type of investment that's sitting there. Okay, now there are actually quite a few people nowadays that are kind of opening up their own accounts and kind of putting some money in there and dabbling in the market themselves. So you have that niche of people that are doing that. So there are, all different types of levels of people who are thinking about various types of investments. So this is not going to be like a detailed podcast on the ins and outs of mutual funds versus the ins and outs of stock. It's not going to be that. Okay, what I'm going to do is go over some general overview information. and then focus on like one key difference between the two very, very common forms of investing. So mutual funds and stocks are two very, very common forms of investing. So just very general overview and focus on one like key main difference. All right. So here, let's start with mutual funds. So mutual funds, they're basically a pool of assets invested in like stocks, bonds, and other types of securities. So it's just like a pool of money, just pool of assets going in there all together and investing in various types of securities, whether they be stocks or bonds or what have you. Mutual funds invest in many different companies, right? So there's a certain level of diversification built in, like a certain level of diversification is built into a mutual fund that doesn't occur with a single stock. So when you invest in a stock, that's just that one particular company. For example, one mutual fund company may invest in hundreds of different companies. So that means you have hundreds of different stocks, quote unquote, mutual companies that you're investing in that one particular mutual fund. Now, here's what I want you to be careful of though. Some people get caught up in this. If you're investing in what's called a sector fund, so listen to this, sector, S-E-C-T-O-R, like an industry type fund that's focused on one particular sector, then that's going to skew your diversification, right? So for example, if you're invested in a tech fund or a financial fund or a real estate fund, then you kind of taken away some of your diversity. Well, you've taken away a lot of your diversification because you're in that sector, that particular industry. And if something adversely hits that, then it's probably going to drag that whole fund down, similar to what it would if it was just an individual stock, right? So if you're in a sector fund, it takes away a certain amount of that diversification that you would have if you were investing in like one fund had, say, financials and health and communication and tech and energy. That's diversification amongst various sectors versus just one sector. See what I mean? Does that make sense? Yeah, it's making sense to you. Okay. So that, you're going to have adverse consequences if you have a sector fund like that. It will drag it down similar to a stock. Now, I've had situations where a particular stock, like you have an industry and that stock is part of this industry and the industry as a whole is not doing that well, but one particular stock, a company is beating the other companies for some reason or another. That happens sometimes. But let's not put our pennies on that, okay? All right, so here we go. I just want to reiterate, the buffer of diversification is drastically reduced in a sector fund, right? Now, so that's it for mutual funds. Automatic level of diversification in there because it's invested in a lot of different companies, sometimes hundreds of companies. But you take away some of that diversification if you have it concentrated or focused in one particular sector. Now, let's talk about stocks real quick. So a stock is very different from a mutual fund because it doesn't have that diversification, right? You're an ABC company. That's it. Your stock is in this one particular company, and it doesn't have that diversification that's built in with a mutual fund because mutual funds have many companies that they're investing in. So a stock is the one company, and what affects that particular company is going to affect the value of that stock, right? So when you invest in a stock, you lose the automatic diversification that comes with investing in a mutual fund. That's the key difference. Mutual fund, you're investing in a whole lot of different companies with a pool of assets versus stock, one company you're investing in. Now, both of these investments have their advantages. They both have their clear advantages, and we're not going to spend time going into the advantages and or the disadvantages, quote unquote, of each one of them. Just know the difference and do what's right for you, right? So just as a general thought process, investing in a mutual fund, it's in the market, so it's still volatile, there's still risk to it. Some funds are more growth oriented or aggressive than others. And then you have your stock. You have some stocks that are, quote unquote, supposedly safer than others or whatever, but that is no guarantee with either one of them, with stocks or mutual funds. So just understand the key difference between the two and know what you have in your portfolio and just do the right thing for yourself. Okay. That's all. That's as far as I'm going with it. All right. That's it for today's podcast. Okay. So the recap is just to know the difference, right? The mutual fund, automatic certain level of diversification because you have a lot of different companies you're investing in. versus a stock. You just have that one stock, or you could have a portfolio of stocks. You could have multiple stocks that you're investing in, but each one of those is your money is tied up into that one particular stock or that one particular company, not dumped into a pool and diversified amongst sometimes hundreds of different companies. Okay. All right. Thank you guys for listening. I really appreciate that. Like I do every week, I thank you so much for listening. I ask that you forward this podcast to your friends, your family members, your coworkers, your church members, your employers, everyone across the country, no, everyone across the world, like I like to say every week, because the internet is global, right? So please, push this out, ask them to do the same, to forward it to their friends, their family members, their church members, their coworkers, their employers, so we can make these, these things go viral. All of my podcasts are on YouTube. So if you go to YouTube, my name, Ernest Burley Jr., is just under my name. I have a ton of different podcasts in there on various topics, anything from real estate to infinite banking, whether you should pay off your home early or not, how to increase your credit score, beneficiaries versus wills and trusts. Like there's just a whole wide array of different topics on my podcast channel. So please check that out, my YouTube channel. So please check that out and forward my channel to others. Subscribe first, right? Subscribe and then click around for a podcast that may be of interest to you. I really appreciate it. Okay. So subscribe, so we can get those subscribers up. I really appreciate every week more and more people are subscribing and, getting other people to subscribe. So I appreciate that. Please keep that going. If you want to connect with me, very easy to do. My email address is just my first name at my full name.com. So ernest@ernestburleyjr.com. Or you can reach out to me on my website. My website title or name is just ernestburley.com or ernestburleyjr.com. It's just my name.com. Very easy to reach out to me from there. And also you can click around in there. I have a lot of very, very informative videos in there and a lot of different information that will be helpful to you, I think, pretty much. So you can also contact me via phone. So you can give me a call, 301-262-2600. Again, 301-262-2600. And that is the number to my firm. We can connect that way. And that is it. So I really appreciate y'all listening. I do have to give my disclosure, as you know, every week I have to do that, since I mentioned that I'm an investment advisor representative. I'm a certified financial planner. Anything dealing with securities or investing, things of that nature, I have to read off my disclosure. So here we go. Burley Insurance and Financial Services, Inc., 13621 Annapolis Road in Bowie, Maryland, 20720. That's where my firm is located, just outside of Washington, D.C., in the suburb area in Maryland, Bowie, Maryland. Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA and SIPC. Burley Insurance and Financial Services, Inc. is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Ernest Burley Jr., MWA, and Burley Insurance and Financial Services, Inc., and not those of Next Financial Group, Inc. Next Financial Group, Inc. does not provide tax advice. That's it for today's podcast. Hope y'all got something out of it. Like I said, I wanted to keep it pretty succinct and to the point. Until next time, y'all be safe out there and y'all take care.